Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and what a Wednesday it has turned out to be for the markets. A wonderful Wednesday, so to say, because 80,000, that's the level that we hit on the Sensex today. And mind you, this is the fastest 10,000 point rally that the Sensex has seen. It has covered this 10,000 up move in just about 139 sessions. In fact, the Nifty as well hit a fresh high. It went past that 24,300 mark in intraday trade. A triple digit move coming in on the Nifty and over 540 point rally coming in on the Sensex. Of course, what was leading from the front was the banking pack today, the Nifty Bank index. Mind you, it was the weekly expiry as well for the Nifty Bank index, and we saw the Nifty Bank index hitting a fresh high, 53,000 on the screen for the Nifty Bank index as well. It has managed to shut shop above that level. That's a crucial point to note. An over 900 point up move coming in on this index. Aside of that, broader markets were also in fine fettle. You saw the Nifty mid cap index gaining 0.8%. The Nifty small cap index was up by 1% or thereabouts. The breadth was firmly in favor of gainers. So the NSE advance decline ratio was almost 2:1, 1,560 advances to 874 declines. Aside of banks, what did well was the PSU banking lot. Last few sessions we saw PSU banks coming under some bit of pressure, but today we have managed to reverse that trend. Metals as well were shining in today's session. If you look at the top contributors on the Nifty, the positive contributors, 4 out of the 5 counters were from the banking pack. So HDFC Bank, of course, on the back of positive news flow, we saw that stock rallying in today's session. So HDFC Bank was one of the top contributors. Axis Bank, ICICI Bank, SBI was also among that. Among the negative contributors on the Nifty, you had Reliance Industries, TCS, Titan, Tata Motors. Aside of that, if you look at some of the other movers on the Nifty, Tata Consumer, Kotak Bank, Axis Bank, HDFC Bank, as I already mentioned, these are some of the movers. On the flip side, after the kind of up move we have seen on the IT pack, today it was a day of breather because the likes of TCS were under pressure. So TCS was the top laggard on the Nifty, and aside of that, Titan, Reliance Industries, Tata Motors, Hindalco, Zipline, L&T were among the losers. Also, if you look at the broader end of the markets, Castrol was one stock that was firing up, over 10% move there. Shipbuilders continue to do well, Mazgaon Dock, Cochin Shipyard among the gainers, and so was HUDCO. On the flip side, Chola Finance, JK Paper, Sumitomo, CDSL as well as JK Bank. These were some of the losers on the Nifty 500 index. But on that note, we have a guest on the show today. Joining me is Thakkar, who is the head derivatives and quant research at ICICI Securities. Jay, great to have you on the show. 80,000 on the Sensex, a reality. Nifty as well, just about 200 points away from that 24,500 mark. I mean, the base level or the support level for the index keeps going higher. What is the next base that you are factoring in for the Nifty?
Hi, good afternoon to you, Nandita. See, I would say that Nifty, after having taken off that rising channel resistance, I would say that was around 23,700 levels. I mean, it's just been forming high tops, high bottom, Nandita. In fact, it did consolidate as well, I would say. I mean, recently, within that range of say 23,700 to 23,300. But after the breakout from there, I mean, we aren't seeing any pause coming in Nifty, especially, I mean, a day or two consolidation is okay, but then we're not seeing any longer correction or a consolidation as of now. The overall momentum seems to be quite positive, right from daily to monthly degree. I mean, we did see Nandita, if you look at the FI numbers as well. So we did see FI basically coming on the positive side, at least for the June series. I would say not much positive, and whatever they bought for the entire month, they've sold it in 2 days in July. But then at least that has taken a pause. I mean, that's something that I would say which is also short-term positive. I mean, we have seen the futures data of FI. I mean, they were down by around say 15 to 20% net long overall percentage-wise, and that jumped to 80% plus. I mean, that clearly shows that FI bought in the futures as well, both in index and stock futures or the derivatives position was quite positive out there. That also had index move higher. And then yes, the bank come back from the bank and IT. The two sectors which were not performing quite well. If you see, most of the other sectors are performing now. It's just PSU that's spending. Some of the PSUs are performing, some of the PSUs aren't. But otherwise, these were the two sectors, IT and banking, which were actually not moving up, due to which Nifty was struggling and was stuck in a range. And the kind of momentum you saw getting built up there has eventually helped Nifty to climb higher as well.
Right. Talking about the Nifty Bank index, of course, this was one index, as you mentioned, that wasn't really firing up, but that has started now. 53,000 has been cleared. We have closed above that level. So, on the higher side, what are the levels you'll be watching out for in terms of resistance?
Well, see, 53,000 was the immediate hurdle, and it managed to surpass those levels today. I mean, all thanks to HDFC Bank inclusion in MSCI, and definitely, not inclusion, I would say rather, the weightage has increased out there. What's also happened is, from the banking side, fundamentally, if you see, then also, the inclusion of the Indian bond index, has also, in fact, raised the outlook positively for the overall banking sector. That's the most important thing. And the third point is that, with this HDFC move, we have seen the private sector banks coming in upward momentum again today. So I think that only the PSU banking pack, I mean, that's not performing. I mean, post general election outcome, the kind of dip which we have seen out there, they are not able to come back or make a comeback. I mean, whether you look at PNB, SBI, Bob, I mean, all of them which are included in the bank Nifty or the component of the bank Nifty, they aren't performing, but the private sector banks are leading from the front, and they have the high weightage, and they continue to do so. I mean, we are not seeing any major reversal or, I would say, resistance. I mean, HDFC Bank does have a resistance around the levels of these 1800 now. So it really need to surpass 1800 decisively. I mean, that's happened, and the stock has come to these levels almost 6 times now, Nandita, and now it needs to take off. I mean, in order to gain that huge breakout and momentum on the upside. Otherwise, it can again go back into that consolidation mode. Otherwise, if you look at the other private sector banks, all of them are looking good. So yes, 3,500 now. I mean, this is a critical range, Nandita. If Bank Nifty manages to surpass this 53,500 range from here on, it's heading towards 55,000, which is also our house view, and that's our target going forward for Bank Nifty. That's 55,000. 53,500 gets taken off. That's the target. And on the downside, now I believe that yes, 52,000. I mean, will continue to be a very strong support until those levels aren't broken. The outlook will be sideways to positive for Nifty Bank.
53,500, of course, a crucial level to watch out for on the upside. Of course, you already spoke about HDFC Bank, which I was going to ask you about, but 1800 levels, crucial to watch. But nevertheless, the stock is up 30% from February lows. So it has come up, but hasn't really fired up. But going into August, when that MSCI weight increase takes place, would you expect the stock to clear 1850 kind of hurdles in the next couple of, not couple of months, but yeah, another 30 days or so?
They should take off 1800. I mean, if that happens, then you can see 1850, 1900 plus levels as well. I mean, see, whatever had to happen with this news now, it's like well known on the street now to everyone. So, with that, I think most of the things are discounted.
Okay.
As I said, that 1800 levels needs to be taken off, otherwise it will go back into the consolidation. So, I mean, since the weight is getting increased in August, but then price discounts are well in advance. So that's what has happened. I mean, that's the reason we have seen that HDFC Bank has been performing quite well post his last quarterly results. I mean, wherein we have seen some dip, and from there it has just recovered and has been forming high tops, high bottom, and it has climbed back to from 1550 levels to maybe almost 1780 levels. So that's almost 200 to 250 points jump now. So yes, most of the things are discounted. Now we need to see in the coming earnings season, coming results. I mean, to start from July onwards, whether the numbers are also reflecting the same. I mean, if we see some good improvement in the NIMs, then yes, technically you will get a breakout about 1800 levels. Failing to do so, it might get just this stock back into the consolidation mode.
Right. Okay, that's the view on an HDFC Bank. But what about Mahindra and Mahindra Finance from the NBFC space? It has come out with its first quarter update. Hasn't been all that encouraging. Asset quality woes continue. You have disbursements that have grown at a meager 3% on a YY basis. I think on a quarter-on-quarter basis, it has in fact seen lower disbursements. M&M Finance, last 5 days, I think the traction that it has seen over the last 1 month has fizzled out a bit. But on the charts, what are you spotting in terms of chart patterns? Is it expected to dip below the 300 level in the coming sessions?
See, it's struggling to move higher above the levels of 315. I mean, whenever it goes around those levels, I mean, there is some of the other news around M&M Finance, and the stock sees some correction. But then the dip is also bought. I mean, recently we saw the news about the CFO resigning for some personal reason, and we saw a dip, and then we saw the good recovery also. I guess it was in the last week of June, and again today we saw a dip until 288, and we saw some good bounce back as well. So this stock is struggling, but at the same time it's finding a good support also at the lower end. So my point would be that technically, or from the derivative data point of view, if you see, it has got a good build up around the levels of 320 on the call front. So 315, 320, if those levels get taken off, you don't have any major hurdle until 350, 370, Nandita. So if you want that clear momentum favoring your side when you are actually trading on the short-term time frame, then I think 315, 320 range decisively needs to be taken off. Above those levels, that definitely there would be a swift move. Till that doesn't happen, it can just consolidate around this 300 levels, or maybe also dip slowly around the levels of 280, 275, wherein it has been forming or finding good support levels in the recent past.
Okay, that's the view. You expect some bit of consolidation around the 300 level for M&M Finance. The other stock that was in focus was Demart. First quarter update has come out. 18% growth in standalone revenues. It has added 6 stores in the first quarter, and total number of stores now stands at 371, and the company's store addition has grown 13.5% on a YY basis. I think last Demart hit a 52-week high was in April, if I'm not mistaken. Last 1 month we have seen some bit of traction, but could it make a dash at that 5,000 level anytime soon?
I think those are the levels which I am eyeing for, and Nandita, just not that. I think that it is likely to inch above the levels of 5,500 and might form a new lifetime high of 6,000 as well. See, this is one of the stock which, Nandita, is quite likely to be introduced in the F&O segment as well. In the upcoming changes, and there are the list of few stocks which are likely to come into the F&O, and Demart can be just one of them. And that's the derivative view. I think that will definitely bring some traction again. And this stock, I mean, obviously, once it gets into the F&O, thereafter it may find some consolidation or maybe resistance at the higher levels. But until that, it might just move up. And it has provided a breakout from a symmetrical triangular pattern as well recently. So the target of that triangle pattern is coming to 5,500. So those are my medium-term targets for Demart. I think that now on the downside, 4,200 to 4,500 range. I mean, that's a broader range, but then till that range is not broken, the overall positional outlook for Demart is positive. Keeping in mind the probability of it getting introduced in the F&O is also quite high.
Right. Another retail stock, V-Mart, has seen very good traction in the last 1 month. We've seen a 40% up move today as well. It was up somewhere around 5% or thereabouts. Even this company has come out with its first quarter update. Today it hit a fresh 52-week high. Q1 revenues have grown in double digits, 16%. Same store sales growth are up 12%. It has also added new stores and it plans to open somewhere around 50 new stores in FY25. But should one ride this momentum, or do you think entering that overbought zone now?
So definitely it should be a buy on dips around the levels of 2800 because it is nearing a resistance zone of 3150, 3200, and it has got multiple resistance in the range of say 3150 to 3400. So about 3400, thereafter it will swiftly move towards say 4200. But at least in 34, it has got a hurdle at each 50 to 100 points technically. But buy on dip should be the strategy because the stock has bottomed out with a good inverse head and shoulders pattern after retracing 61% of its entire rise lifetime. So I don't think that until 2500 levels are broken, 25 to 2400 range is broken downside, there would be a positional reversal from up to down in this stock, but buy on dips definitely Nandita should be a strategy. And then overall FMCG bag is doing good, the retail is doing good, which is linked to the FMCG, and the monsoon outlook for this season is also quite positive. I mean, it's normal or above normal range, so we don't need to worry about those two. I think anything linked to FMCG or maybe retail is likely to perform good because I'm sure that with this kind of outlook from the monsoon as well is positive for all the FMCG stocks, and which will definitely help in improving the margins overall for these related sectors as well.
Right, last couple of stocks really, REC, PFC, Discoms, these stocks, saw a phenomenal run, but over the last 3 months, the returns haven't been all that great. The rally took a breather. Last 1 month, returns have been negative, but now again, we saw a renewed up move today. Of course, there has been a trigger. We have a global brokerage initiating buy calls on both the stocks, REC and PFC. But would you say after the recent correction, the risk reward for these two stocks are looking favorable within the power space?
And I would say that with today's move, definitely the probability of again forming a lifetime high is there because post the election outcome or on the day of election outcome results, I would say rather, the stock had fallen quite a lot sharply, both of them, because they both were in the overbought territory. So anything that was overbought was beaten down quite sharply. Any PSUs, I mean, they were hard hit, right? And thereafter PSUs found it difficult to recover as well. But now it has started to form high tops, high bottom, both of these stocks. So technically now today we have seen a reversal. So now 500 levels now on an immediate basis on PFC and maybe on REC it would be around say 530 levels. These two levels are held respectively for PFC and REC. I think the short term trend will be positive and one can eye for the all time high levels, 600 plus levels for REC and 560 plus levels or 540 plus levels for PFC. But then, anything related to power, I mean, for the long term, medium to long term is positive because, there is always a demand shortage as of now with kind of consumption or increasing consumption which we are looking even because of the capex cycle running. So fundamentally also, if you see, the demand for power is also going to be there. I mean, it can be wind, hydro, thermal. Whichever you see, I mean, you see the BHEL also performing quite well in today's session. So anything related to power is doing good, and the overall momentum in this sector is quite positive as far as trading insights are concerned or trading levels are concerned. So as I said, I mean, today both of these stocks have confirmed the high tops, high bottom. So till 500 levels are held on PFC and 530 levels are held on REC. The short term outlook is positive.
All right, that's the view. Then last talk on my list today, Wokhard. Almost a 40% rally in the last 5 sessions. What do you make of it? There is news flow. There's a trigger behind that. Two crucial antibiotics have inched closer to launch. This has fired up the stock. As I mentioned, almost a 40% uptick in the last 5 days. How do you trade into this?
Sort of a double bottom breakout, but on a weekly chart I see or a monthly chart I see a good 5-wave rising structure. So I think that I don't know, I may be wrong, but then I think that is nearing the resistance of 950, 1000 levels. I mean, very, very near term, you have a resistance. So I don't think that risk reward will be favorable from here on. Long term chart structure is definitely reversed, Nandita, because we've seen an impulse move. There's a 5-wave rising structure right from the bottom. So, I mean, the move which we have seen recently from 140 until this recent highs or today, it's a 5-wave rising structure on monthly chart. So, that's medium to long term positive, but short term, it's like, it's quite overbought.
Okay. Okay, that's the view then. But before I let you go, recommendations, anything on your horizon for the next 2 sessions, and where do you expect the markets to, in fact, the Nifty to end the week?
Well, I think that till 24,000 to 24,200 range is held, Nandita. I mean, overall outlook is positive. I think that tomorrow is crucial. I mean, we have this weekly expiry. So if Nifty opens above the levels of 24,300, and if maybe with a high margin of say around 340, 350, then for tomorrow 24,300 would be a very crucial support. So the base will shift from the intraday perspective from 24,200 to 24,300, and then you can eye for around say 24,000, 450, 500 range for this week. So another 1% move can come for next 2 days. I mean, we have a half day today for the US market, so they will be trading only for the half day. But then, as of now, the things are positive out there. And as far as recommendations are concerned, this is one stock which I would recommend quite strongly is Reliance Industries. I mean, the kind of breakout which we have seen after March. I mean, it's a 4-month long consolidation on Reliance, a good underperformance, and now it has provided a breakout beyond those levels of 3,020, 3,040. I think the stock is ready to move towards the levels of 3,200 to 3,250. I mean, till 3,040 levels are held. So this is a very strong buy recommendation from my side. I think this is one stock which will really help the indices, especially Nifty, to maintain these levels and move higher as well.
All right, that's the recommendation coming in from Jay. But Jay, with that, we are completely timed out. Thanks a lot for taking out time and joining us this afternoon. It's always a pleasure. Look forward to our next chat.
Sure. Thank you.
Thank you. Well, with that, we've come to the end of this edition of Closing Bell. Of course, we have closed very close to that 24,300 level. And as Jay was mentioning, the base moves higher. If we open above 24,300, then 24,300 will act as a support for the rest of the week. But with that, thanks a lot from me and the entire team for watching the show. Stay tuned to Money Control and come back and join me tomorrow morning at 9 a.m. on Opening Bell. Have a great evening.